We play in crypto for ourselves because it's fun and we're in the world of finance. We need to know what's going on out there. But we don't invest our clients' money in crypto, for example. There's no fundamental value that we understand in cryptocurrency. We understand blockchain well, and so we are invested in blockchain companies. One of the things I often say about the stock market is it's a good leveler. Like, it'll humble you very quickly. Like, it teaches you humility. You are not perfect. You're not always going to get it right. In this industry, first of all, there are so many fail-safes and security measures and right? We're not even going to talk about Madoff, right? But so I don't really understand, because it's such a foreign concept. It's a nebulous concept of a number and not money, almost. So I understand my responsibility to my clients. They work hard for their money, and so I must do the best I can when I'm managing their money to get the best return for them and to grow their money for them. But at no stage do I think, oh, there's 100 Rand, they won't miss it. Like, it's not, the effort you actually have to go to like steal in this industry is like, it's just not worth it. Like, I don't understand.
Hello everyone, welcome to This Is Dope. Today, it's a very unique episode. Why? Because we also have a very unique asset manager. We're sitting down with her, we're gonna learn a lot of things. Who do we have? We have Anthea Gardner. Everybody knows her as the CEO and founder of Cartesian Capital Investment Management, right? But I'm gonna give her a fresh intro because everybody knows about Cartesian, and everybody knows that she's a social commentator. So I'm going to give a very unique intro. First of all, Anthea has an MBA from Wits University, and her MBA thesis was specifically about pricing options in South Africa. So what does that mean? It means she's very smart. Apart from being very smart, she's very healthy. Why? Because she did the Ironman. That means she's very, very fit, by the way, and very disciplined, because she has to be consistent in order to train for that challenge. But anyway, ladies and gentlemen, let's please welcome Anthea Gardner to This Is Dope. Anthea, how are you?
Hi Art, I'm good. How are you? That's quite an intro, thank you.
Wow, you earned it.
Thank you.
Tell me this. Let's start from the beginning. Where were you born?
So I'm a Cape Town girl.
Okay.
Born and bred, grew up there, went to school there, went to university there. The fact that I've lived around the world is just a bonus.
And then how was it growing up in Cape Town?
I loved it. I do love the sea. I'm a bit of a water baby. So all of the other things you mentioned, I also surf, kite surf, swim, all sorts of fun things. Like I really enjoy being in the water. And so living in Johannesburg now is a bit weird. I'll admit to that. It's odd. But I must probably mention, I'm old enough. So I grew up as a coloured woman in Cape Town during an apartheid era. And I mean, I'm not one to look in the past. I like to look forward. But I think it does shape you. It does decide what sort of person you are and who you are. And one of my luckiest kind of things about me, or the luck that I have, is that I managed to go to probably the first mixed race school in South Africa under the apartheid era or regime in 1976. So now you know how old I am. You can quickly work that out, right? And what's interesting about it is that all the friends I made at school, we're still friends today. 45 years or more, actually. Goodness, time flies. 47 years later, right? And I think that experience so it was a girls' school, and I think the experience of being different from the rest of South Africa kept us together and kept us as friends. But it also taught us a couple of things. I think one of them is understanding diversity, accepting people as they are and who they are. And so I'm really grateful that I was lucky enough to have that experience.
Wow. Well, from that experience, which was the best moment that you've ever had?
Oh, no. That is near impossible. But, there's so many moments. And it's funny you asked me for the best one, because there were so many of them. But can I tell you about one of the worst ones? Would you mind?
Yeah.
So, apartheid era, bunch of black, white, colored, Muslim, Christian, a bunch of girls, right? We're going to a teenage party. So it's somebody's party. We go to, I was going to mention the name, but I won't, right? So a chain of restaurants. And they wouldn't allow the non-white girls in. So how bizarre is that? And probably it was one of my first experiences of racism. And because we were so protected, right? So we were all friends. We didn't care what your skin color was or your religion. We were friends. And in fact, you were judged in inverted commas by how good you were at school or at sport, because those were the criteria we saw each other in. Those were the boxes we put each other in. So when you suddenly get told that you're not good enough because of your skin color or you're not allowed to, it's quite a shock. So I guess interesting, different. I mean, was it the worst experience of my life? No. Did it teach me something? Yes. Did it bring us closer together? Absolutely. Because we were friends, and so nobody was going to put up with that nonsense. Nobody was going to tolerate in our group people being racist to their friend. So as bad an experience as it was, I guess that ended up being one of the better experiences.
I see how you twisted the obstacles the way, so you learned from it. And then talking about learning, when you were growing up, who facilitated a learning environment for you?
Oh, my parents. There was no doubt about that. So my father's a bank manager. Here's another interesting arbitrary fact. He was the first non-white bank manager in the country.
Oh, wow.
For that great blue bank. And I can't remember, that must have been in the 80s. And so I think kind of having broken that boundary that had been established during that era was kind of, I guess, partly showing me the way. But to get there, he spent a lot of time studying. I'd wake up at, 4 or 5 in the morning. We're both early birds. And then he'd be in the study studying. And you'd think, surely this man is fine where he is. He's a bank manager. He's reached kind of fairly high point in his career. But he carried on studying all the way through his entire life, I guess. And and you know what it is? It's not that I was forced to learn or to, it just is. It becomes part of you. So, children do what they see others do. They don't do what they're told. So
exactly.
If you're going to force somebody to say, you have to do that, but you're not doing it, then it's not going to work. So yeah, I would say my father, and then of course my father's sister, my aunt, was a teacher. And she was definitely one of my favorites. She was much younger than my father, and she was fun. She was a lot more fun. My dad was very serious, as bank managers go. And she was a teacher, and she was always around on holidays, and, she'd always play sport. In fact, there's a story about her as well, because a lot of people blame her for my craziness. She's retired and still runs the Comrades. Wow. She's now training for an Ironman. She's retired, so she's over 65, right? And she's still training for an Ironman. In fact, she did Comrades with a broken shoulder a couple of years ago and finished.
Whoa!
So whenever my friends and I talk about, what is with this? Getting up at 4:30 or 5 in the morning and getting into a freezing cold pool to go and swim for training for triathlon, they always go, oh yes, no, it runs in the family. It's a family problem. So I guess I just copied what my family did.
So you mentioned that you wake up early. Right now, what time do you wake up?
On average, about 4:30 is my wake-up time, whether or not I need to, or whether or not the sun is out and ready for me. But the downside of that is I'm really terrible conversation at dinner. I generally don't last past 9 or 10 o'clock because then I'm exhausted.
Yeah, you have to sleep. Hectic. What's the earliest you've ever woken up?
Wow. That's a interesting question. I mean, I am so old. I've had so many years of early wake-ups. I guess in my adult life, 3 o'clock, 3:30, wow. But it also depends on kind of what I'm doing and why I'm doing it. So I've woken up really early to get an early flight. I've woken up really early to go cycling before the roads get busy. Yeah, all sorts of reasons to wake up early in the morning. On average, though, 4:30 is kind of my time. You know, that's my up and atom. And I drive my friends crazy when we go on holiday, right? Because I'm the person who's up and ready and what are we doing and where are we going? And they're like, can we just sleep? We're on holiday. And then they normally send me off for a run to burn off some energy.
Okay.
To bring back the croissants or whatever it is that wherever we're holidaying. But yeah, I'm an early riser.
Okay, what's your favorite holiday destination?
I don't know if I have a favorite destination. I certainly have a favorite holiday. And it's kind of torn between two. So I love skiing holidays and I love scuba diving holidays. I'm not the person to go and lie on the beach and do nothing. And that's another one of the things that drives my friends crazy. Whenever we go, let's go on holiday, like, oh no, really, do we have to? They want to relax, and for them it's downtime. I mean, I do enjoy being on the beach and reading the book, but that's only if I've scuba dived in the morning. You know, I don't generally do nothing on holiday.
Okay, so what do you actually do on your downtime apart from going on holiday? What do you do on your downtime? Because you sound like a very productive person.
I love reading. I definitely read a lot, and that's kind of sit down. You can't swim, bike, run while you're reading. You know, so that's when I really sit down quietly and just not move for a change, right? But yeah, I would say that's pretty much it. I do love food and wine. Another arbitrary fact about me is that I have my higher certificate in wine. So I did that. I did that when I was living in London. So there's a certificate, higher certificate, and then 2 more levels you get to your Master of Wine. So basically qualified wine taster. And so yeah, I love eating, which is probably why I need to exercise so much, because I do love eating, and a good glass of wine doesn't go amiss.
Wow, okay, that's nice. Now I understand why you talk about wines in your book.
Okay.
As an asset class. So let's go back to being productive. What makes you more productive? What's that one hack or that one tip that you do that makes you more productive?
That's a good question. Sure. Deadlines, eh? You don't really have a choice, right? If there's a deadline, you best be productive and get on with it. Like, I don't generally like missing deadlines. And you know how it is. Procrastination really is the thief of time. And trust me, as productive as I would like to be, or as I think I am, even I procrastinate, right? And the worst, you know, when you're writing an article, or in my case, kind of researching or whatever, and you've got that deadline. If I don't have a deadline, I can go on and on and on. Like, I can write for days about the stock market and about investing. Like, I can talk about it for days. And I find, like with presentations or when I'm writing due diligences or research, if I don't say today at this time, I will stop. I will change it. I will add it. I will, you know. Presentations are my worst, right? Because you start the presentation, you know what you need to do in it, and you present, and then it's done. But then you've still got another day. So, oh wait, I'll just quickly go back and change that. And then 2 hours later, you've changed that and you've moved that icon here, you've used a different word. That's me. Deadline, to be productive, I have to have a deadline.
So would you say you're a perfectionist?
I'm not perfect. I do like to get as close as possible to excellence. I think my team might call me a perfectionist. You know, and it's kind of, I guess, part of what we do in investments. We just have to get it right. We can't not get it right. Like in our business, the small things become big things. We trade not hundreds or thousands or tens of thousands, or we trade hundreds of millions of rand. Now, imagine you were putting through a trade for R1 million, and by mistake you added an extra 0 at the end, right? That's a 9 million rand mistake. We can't afford not to pay attention to detail and not to get it right and not aim for perfection.
That's crazy. If I'm not mistaken, I think that mistake happened with the founder of BlackRock. Before he founded BlackRock, I think he did a similar mistake in terms of numbers, and he put in the wrong amount. Everything just went wrong and he got fired. But that was a blessing, because that's the beginning of founding BlackRock. But anyway,
We've all got stories like that. I often tell my team or remind my team about the first mistake I made. Okay. It cost me 1,000 rand, or it cost the company 1,000 rand. Also, it was a trading mistake. I punched in a wrong number, and I was like, oh my goodness. And of course, what happens then is if you trade and you make a mistake, you don't hold on to your trade. That's one of the biggest mistakes traders make. They think if they've made a mistake, it'll turn in their favor. Yeah, so I bought some Anglo-Americans. It's not looking good. I'll wait till the share travels higher, or, and then I'll sell it at a higher price and make a profit. Those trades never go in your favor. It's the craziest thing. It's just experience. So the idea is to get out of it as soon as possible, even if you make a loss. I went home that night and cried over 1,000 rand. I admit I cried. 1,000 rand. A couple of years later, I was working at Morgan Stanley in London, and we were trading in dollars. In fact, I was trading for the Soros fund.
Oh, wow. Nice.
And I made a big mistake. Well, I was at Morgan Stanley. They were one of my clients. And I made a mistake. My spreadsheet that I uploaded the trades, it kind of went out of sync, because that happens sometimes, when you highlight and you sort them, then it doesn't all move in order. It happens. Press. And because you're so used to doing it, you kind of press. And even when the system says, are you sure you want to? Because you know the job and you've been doing it for a while, you just go click, 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 right? Off you go. And then you go, oh, shit, that was not right. That cost the company over $20,000.
Whoa.
Exactly. They didn't fire me. That was very kind of them. but what I'm trying to point out is that in this industry, like, yes, we can't make mistakes because they cost a lot of money, but you can't always be perfect, right? You do make mistakes. Everybody makes mistakes. And if you're not being careless, then it's okay. Like, if you're not the person who's making a mistake every week, every month, every year even, then you're allowed 1 or 2 mistakes. We aim for perfection, but we're not perfect.
As long as you learn from the mistakes, right?
Right.
I hear what you say. So, with the mistake you made at Morgan Stanley, did you go home and cry?
No. That's the point. I think that, good question, because when you first make that mistake, it's so big you think they're going to fire you, because I did. I thought, oh, that was it. The end of my career in finance and trading. But at Morgan Stanley, by that stage, I'd been so used to it, and the numbers we work with are so big, you almost become distanced from it. You learn to understand that perfection is impossible, right? As long as you're trying your best and doing your best, and your best is good enough, then you're okay, or as good as it can be. You're never going to be successful in this industry if you're making mistakes week after week and you're careless and you don't have respect for yourself or your work. You really need to have respect for yourself and kind of do the best you can do. I mean, I think that's all we've got, right?
Yeah, do the best you can. When you talk about big amounts, there's this lady who works for Coronation. I think she even has a golden key. So now this lady said from school going into Coronation, she saw big amounts of money that she was supposed to work with, and it was a shock to her, So I'm asking you, was it a shock when you started working with big amounts of money? Or how did it feel for you, your first time seeing these amounts and working with them?
It's bizarre. It doesn't feel real. Like you cannot actually, and I used to think about it a lot. I was like, what does R1 million actually look like? Like, what does R1 million, like if I piled up 50 rand notes, what would R1 million, and I can't picture it. I can't imagine it. I had no sense of what it was. And so actually what happens is it doesn't become money. It becomes just a number, right? Oh. Because now you understand what the number is. You don't really understand what a pile of R1 million worth of 10 rand notes looks like. And so you also, so the other thing that's quite interesting, which I've thought about every once in a while, I don't understand people who steal in our industry, because you're not working what feels like not real money. It's not like I'm sitting with a drawer full of cash and there's a 100 rand note like in the bank or in a retail shop, and there's a 100 rand note, and I know what the 100 rand looks and feels like, and I know the difference 100 rand will make in my life. in this industry, first of all, there are so many fail-safes and security measures, and right. We're not even going to talk about Madoff, right? But so I don't really understand, because it's such a foreign concept. It's a nebulous concept of a number and not money, almost. So I understand my responsibility to my clients. They work hard for their money, and so I must do the best I can when I'm managing their money to get the best return for them and to grow their money for them. But at no stage do I think, oh, there's 100 Rand, they won't miss it. Like it's not, the effort you actually have to go to like steal in this industry is like, it's just not worth it. Like I don't understand why, and actually it doesn't happen often, by the way.
Okay.
So that's the other thing, it doesn't happen often.
Really?
No, you'd think that people work with money, that they're tempted, or big amounts. No, because it's not cash. It's a number. It's a portfolio. It's a return. It's out there. Kind of. It's a different concept. It's almost like art, I guess. Like unless you understand the value of the painting, and you understand you can sell it and what it's going to add to your pocket, like what's the point of stealing it, right? And so what's the point of stealing a number on a screen?
I see what you mean.
Right. And then, of course, our industry, fear and greed, right? That's what it's based on, apparently.
That moves a lot of people.
Right? Mm-hmm. And so when we think of someone like Madoff, that was just pure greed. But if you think about the amount of effort he had to go to steal people's money, and it wasn't that he was stealing it, it was that his ego got in the way. And he wanted to be known as the best and have the highest returns of anybody and produce money for everybody. And so it ends up that he's stealing it because he's cheating his clients. But it really was his ego, like, look at me, I'm so great, I'm the best asset manager in the world, and you should be invested with me. And nobody is ever going to be the best asset manager in the world always. Nobody can be number one always. There's only one place to go from number one, right? And at some stage you will. And it's not, and so that's where this whole equation falls down in our industry, the whole, well, what is a Ponzi scheme and why even bother doing it?
Hectic. Talking about Ponzi scheme, how do you feel about Sam Bankman-Fried?
The jury's out on that one. I think he did do wrong. I think again, and I don't know the story completely, but what I've read, right, and it'll come out in years to come. But again, I think it was an ego thing. So he was very smart. He left his banking job. He went to start this crypto business and wanted to prove that he was really good at what he did and how great it was and what he could deliver. And he just gets it wrong. Like, we have so many compliance checks, right? I cannot, if you invest with me, I never touch your money. Like, literally, that money never comes to me as your asset manager. It sits on a platform with somebody else who makes sure that their security is in place. I give the instruction, So Art's got 1,000 Rand in his account. Please, can you invest 200 Rand?
Let's make it 1 million.
Oh, you're right, eh?
Yeah.
We're being a bit silly.
Yes.
So Art's got 10 million Rand in his account. Let's put 1 million into a property fund. Let's put another million into equities. Let's put another million into a money market and another million into a bond, and so we go. So your 10 million sits in your bank account on a platform, a third-party independent platform. I can only give instructions. I can only say, can you please buy X amount of Naspers shares for Art from his account, put those Naspers shares in his account. I can't do anything. I can't take the money out. I can't put more money in. I can't. In fact, I can't even instruct the third-party platform to send you your money. You have to do it, and they have to make sure the security measures are in place. So it's impossibly difficult, I think, in this industry. So back to old Sam. What he didn't do, and here's the problem with crypto, is that it's because it's unregulated. They can move money around between accounts, and so they do. And so instead of taking Art's 10 million Rand and investing it, or you investing it, they put some of it in a different account, which is supposed to be your collaterals, your security, your cash, whatever it is, and then you go off and buy your assets, and as the assets increase, things change, and blah, blah.
Oh, I see.
So the fact that he had access to, I don't know, 1 million of your 10 million, and he didn't properly collateralize it, or he didn't put down enough cash for it, that's where it all fell apart. And again, it was bad behavior. It wasn't that I don't think, maybe I'm wrong, I don't think he was trying to steal your R1 million. I think it was just bad behavior. And so the collateral and the movement between the crypto and your collateral was out of sync. And so, of course, when there's a problem, guess what happens? He tries to fix it. He tries to hide it. This reminds me of, what's his name from Lehman Brothers, right? Nick Leeson. So he's the guy who brought Barings Bank to its knees. And, sorry, not Lehman Brothers, Barings Bank. And his problem, he literally brought a bank to its knees because his trading mistakes were so big. And it's not that he stole the money. It's that he made a mistake, hid the first mistake. Then he made another mistake and decided, well, I hid it the first time, I can hide it again. And the hiding of these errors just grew and grew and grew and grew to the point where the bank had no money to cover the losses.
Yeah, that's a crazy story. Because apparently he used, I think, personality and charisma to maneuver that whole thing. So it was about ego, as you said.
But they all do. They are all so charming and charismatic. And Madoff, right? I mean, sure, so many stories about all the people he charmed, all the investors in inverted commas who gave him money. There's another story, the story of Abraj, which is the private equity business. Same story, right? Charming. He always spoke at WEF. He had governments, he had presidents invested with him. And what happened? Went under. Same story. Made a loss, hid the loss because ego couldn't handle it. And he wanted more people to keep investing with him, so he kept hiding his mistakes.
Hectic. So apart from work, when something hits you hard and you have to take a loss, how do you overcome that? How do you not let your ego make you hide the mistake?
I don't know, actually. So I have quite a few friends who suffer from either anxiety or a bit of depression or that sort of thing. And it's always interesting talking to them, because one of the things I've noticed, and in fact we probably need to talk about Richard Sutton a bit here as well, but is that I speak to them and they say, oh, I'm feeling down today. And I know it's a chemical reaction, right? So they can't kickstart themselves out of it. So they need medication or they need to exercise. And I don't understand, because I don't suffer from anxiety or depression. Okay. So I have an ability or a resilience to be able to go, right, you felt sorry for yourself, get up and get on with it. And not everybody has that. So I'm lucky. I make no mistake. I understand how lucky I am. Okay. And in fact, there's a guy called Richard Sutton who wrote a book called The Stress Code. And my team and I just went to his book launch, a new book, yesterday, in fact. He's released a book called Thrive. And it talks about being resilient. It talks about how you are able to, or how you can teach yourself to overcome issues and problems, and how you move forward in life. And I absolutely recommend it. If you can get your hands on it or get to listen to him speak, absolutely, it's worth hearing what he has to say. But because I think it's such an important thing, because we all suffer from feeling down or making mistakes or being knocked down. And it is about how you get up and how many times you are able to get up. I don't have a secret. I wish I did. I don't have an answer. I really am just lucky. I kind of kickstart myself out of it. But I know people don't naturally kickstart themselves out of things.
But it's a good thing that you have it. You like it like that. So tell me this, speaking about books, you talked about the person who wrote Thrive, and you said you like reading. What are your top 3 favorite books of all time?
Oh, I have so many. There's a book I read almost every year. It's so dreadfully boring. Everybody knows it. Everybody reads it. Everybody has read it, but I just love it. It's such an easy, feel-good kind of, like it's a couple of hours worth of reading. It's Paulo Coelho's The Alchemist.
Oh, okay.
Right? You see, you
Yeah.
know it, you've read it.
Yes.
Yeah, it's like, really? That's like so cheesy almost.
Yeah. So let's rank them. We're gonna leave the best one number one, the second best number two, number third, and fourth. We'll give you four because you said you read a lot and you like books. So where would you put The Alchemist?
No, it's definitely my number one.
Oh, so that's number one.
Well, I think
Hectic.
because I've just read it so often, and
Yeah.
I just don't get tired of reading it. Honestly, for the
Wow.
last 15 years, I've read it every single year almost, and I can even reference the page numbers, and
Whoa.
quote from it. How sad is that? So
That's beautiful.
I don't have. I'm not. You're putting me on the spot because I really have to think about it.
Before you move on, wait.
Yes.
Before you move on, if you had the Philosopher's Stone, what would you do with it? Would you make more gold with it, or would you use it to be young?
Oh, I'd use it to be young. I want to live forever. I love life. I really, it's another one of my problems. I tell everyone that I'm going to live to 100.
Wow.
And
That's
medicine had
possible.
better catch up with me, please.
What do you want to do with your youth and living long?
There's so much to do.
Example?
There's so much. You want to travel. You want to experience. You want to meet people. I want to go to space. Like, that's one of my big dreams. Like, I literally am waiting for that day I can write the check and say, SpaceX, where's my seat? I definitely want to see Earth from space. I think it'll be spectacular. So I have to live long enough to be able to, one, ensure that there is space tourism, and two, be able to afford it.
Oh, wow.
And then there's so many things to do. I've only been to 34 countries. There's so many more to go to. So many people to meet, to talk to. There's so many things to do. So yeah, I'm going to live long. Why are we talking about that? Oh, we're talking about books. Oh, so many books to read.
Yes, that's true. I saw this episode of this old show called The Twilight Zone. So it featured this guy who genuinely liked reading. I think he was working in a bank or something, but because he was working, he didn't have enough time to read, right? So in The Twilight Zone, weird things happen, but there's always big lessons in it, right? So what happened there is that this guy, something happened, like a bomb hit the world, and he was the only person in the world. But luckily, a whole entire library survived.
Oh, wow.
He was very happy. He was excited.
Right?
He didn't know where to start, what to do. He was just excited. There were books and books and books throughout his excitement.
And a fridge with ice cream in it, of course.
That'd be very dope. So throughout his excitement, his glasses fell and then he stepped on them by mistake. And then he picked them up, he tried to put them on, it didn't work.
You're breaking my heart here.
And then, that's the Twilight Zone for you. Be careful what you wish for, because you might get it.
Yes, I've heard that.
You see. But anyway, so which books are you looking forward to read? Just 3?
So I got quite a few books for Christmas.
Okay.
I got Shakespeare's sonnets. And that's quite telling, because that's kind of part of the story I wanted to tell you, is that I go through these phases where I like certain things. Like, I don't watch horror movies, but I've read almost every Stephen King book when I was younger. Like, not his most recent ones. And I can't read them now because I'm such a fraidy cat. I'm such a baby. And then, of course, like, you just go through these phases. Like, there's a Dan Brown phase. There's a biographies phase. There's so many different ones. So we're going through a bit of a... So I love Shakespeare as well. So I got Shakespeare's sonnet as a gift, as I said, for Christmas, which is... got to flip through that every once in a while. And then I got the story of Whitey Basson, so I've got to read that. Like, there's so many. There's a Ray Dalio book I'm busy reading. I haven't read the latest one, The Changing World Order. The subtitle's Changing World Order. I'm also finishing now, the Abraj story, so it's called Key Man. It's just my book... the list. Oh, and then, of course, I haven't yet read Andre Agassi's autobiography, so I still need to read that. And then also the new Bill Browder, well, I don't know how new it is, but the most recent Bill Browder book. So very varied reading, but the list is very...
I see. Going back to your top books, okay, Alchemist is number 1. Which are your other top 3 books?
I don't know. I literally am running through my head because I knew you were going to come and ask me this. And I literally can't tell you. Like I just keep seeing all these different books. Obviously everybody in investments has read Benjamin Graham's book, like The Intelligent Investor. And we keep going back to it.
Wait, do you think it's still relevant?
I do actually.
Even today?
Yeah, for sure.
Wow, okay. But anyway, you loved what?
I think because it's so... I don't think investment concepts change. I think the way we invest is changes, and what we invest in changes. But the concept of your fundamental investment theses generally doesn't change or shouldn't change. Where was I? Oh, so I was saying about the books, right? And just so many pop into my head that I can't tell you which one is my favorite. And I'm sorry, terribly disappointed, but go with The Alchemist for now, and a list of autobiographies, biographies, books on investing.
Okay, let's do it this way.
Sports.
Give us one good, because we need our audience to learn and read, right? So give us one book that's best in terms of biographies.
Wow. See, you've done it again. Because last year I read both Obama books, Michelle and Barack. But I've also read Nelson Mandela's biographies, and so many. And Karen Brady from the UK. So kind of, I always, and I've also read Elon Musk's, the one that Vance, what's his name, Vance? I forget his surname. I've read those. And kind of the sports people. And when I think about those and how they blow my mind, because I think I'm more intrigued by how incredibly focused and powerful these people are. Okay. I've just thought of one of my favorites, actually. You know what the problem is? I don't have favorite books. I have favorite authors. And Michael Lewis is one of them. So when I started in the industry, everybody was reading Michael Lewis's, the one about Goldman Sachs and the fixed income trader. It'll come to me as we're talking.
Okay, now...
but he also wrote The Big Short, Michael Lewis.
Oh, okay.
And he still writes now. So he's one of my favorite authors, and I can easily read, and he writes so well.
Oh, so that guy wrote more than one book, okay.
Lots.
Interesting.
He also wrote a book about about Oracle founder and about the yacht that he built. I think it might have been called The Next Big Thing. He definitely wrote a book called The Next Big Thing. Might have been in there, the story of this mega yacht. So yeah, you just put me on the spot, and now I've gone completely blank. So let's change the subject. And as I think about them, I will mention the books as they come to mind.
You're welcome. Talking about books, we have your book. This is a very good book, by the way.
Thank you.
I think I read it within less than a week. That's how. Yes, I remember I told you I read through December, like within a couple of days.
You did tell me, yes, it was you.
Yes. So I read it. That's because that's how relevant it is to me, and how beneficial it is to people in general, because I also feel like you took advanced portfolio management theory and principles and concepts. I feel like you also made them simple for the average person on the street, That's why I devoured it, and I was like, I need to apply this book ASAP, But anyway, I devoured the book, and it inspired me to sit here with you and stuff like that. Now tell me this, what inspired you to write the book in the first place?
My publisher.
Is it? Yes. They reached out to you, and then how did you react in the first place?
So I was doing media. In fact, I was on Gareth Cliff's show. And I got a phone call one day, and Gareth had just released his first book. And I got a call from the publisher going, we'd really like you to write a book. And I was like, what would I write a book about? Like, really, me? And you know how it is, like, everybody's got a book in them. But writing about investments was never going to be my thing. Like, wow. That was never going to be what I wanted to do. And so I actually phoned Gareth and said, they've asked me to write a book. What do you think? He was like, no, so much effort, you won't believe it. So much hard work. It's just the worst thing you can do, and it doesn't pay. I was like, so I phoned them and I said, no, probably not. And then they called me back a couple of weeks later and said, are you sure? I said, well, what do you want me to write on? tell me what you want me to write about. They were like, about investing. So I was like, well, let me think about it. So I went away and I made a list of contents for the book. All the investment jargon you could ever want in your entire life. Sent it to the publisher and I sent it to my sister. And they were like, nobody's going to read that rubbish.
Whoa. Okay.
And it was about the academic concepts about investing. Now, one of the problems with my industry, I love my industry, make no mistake, I love what I do. But one of the problems is we speak in jargon. You know, we speak in spreads and returns and PE ratios and EV EBITDAs. And it scares people. Like, if you're not in it, if it's not what you do, then kind of why? Like, you just get lost in this like crazy language. And yet investing is so important for every single person. Every single person needs to know about investing. So kind of that's how they got me to write the book. They were like, no, we need you to write a book the way you speak about it in the media. Like, take some difficult concepts and make them simple so that you bring people into your world. And one of the kind of crazy things that happened was, like, I'd been in this world for, I don't know, over a decade. And I went on TV one day and I was talking about the stock market and about a company. And my sister phoned me afterwards. She said, oh, so that's what you do for a living. I was like, but how did you not know? And she said, well, because like it's a world over there. You know, this finance, high finance, investing, it's a world out there. It's not a world that we sit around the braai and talk about. In fact, one of the things about South Africans, in fact, most people in the world, it's almost rude to talk about money. Like, I maybe not you. You look like maybe you grew up in a family that were kind of out there and thought about it. But in my family, like, you would never talk about money. It's not a thing you talk about. You never talk about how you earn your money or whether you've got an increase or how much you paid for something, or it's rude almost, right? But there's a part of it that you have to talk about. There's a part of it that the world of investing, and you don't have to talk about, oh, I invested 1,000 Rand with Anthea Gardner. You can say, I invested 1,000 Rand, and I think I should be invested in property, or I think I should be invested in equities, or I should be invested in some fixed income, lower risk, high kind of return instrument or portfolio. But why don't we? So that's why the book came about, because I felt like I needed to bring people into my world. And so hopefully instill some sort of love for it, because that's the other thing. When we were growing up, I never even knew there was a thing like the stock market, even though my father was a bank manager. Like, we just, it wasn't a career option. So when I was growing up, like, what were you going to be? Well, obviously a teacher or a lawyer or a doctor, but nobody ever says, well, why don't you become an asset manager or a trader? And that was in my time. And I've spoken to some of the youngsters that I engage with today, and it still doesn't come up as a career option.
Yeah, which is partly why we're also here, especially because you're a female asset manager and a CEO, right? How did you get into this?
Yeah, there's a great story. So I was in London, the first time I went to London, and it was kind of in my 20s, and I was, you're young and just sitting around, not sure what you want to do. So I ended up working for this wine company, which is how I became a qualified wine taster. And the people who owned the business were ex-traders on the stock market. And I was at some stage where I was like in my 20s now, kind of having to decide what career I'm going to take. Because I studied psychology, but that wasn't going to be it. I was going to be a teacher, and that wasn't going to be it. But now I'm lost, right? Because I grew up thinking I was going to be a teacher. Now I decided maybe a psychologist. Then I said, actually, no, that's not for me. Finished my degree, and then I was like, went off to London, and I was sitting, but now I've worked with this company for a while. And by coincidence, kind of we were out for dinner, and I said to the owner of the company, I said, do you know, I really don't know what I want to do with my life. And he kind of looked at me and went, that's funny, because I know what you should do. And I was like, really? What do you think I should do? He's like, but you have the personality of a trader, like a stockbroker type person. I'm like, oh, really? So I went home that night and looked up, what do traders do? What do stockbrokers do? And that set me on this path of doing what I do. And then a couple of months later, came back to South Africa to study finance so that I could get into this world of finance, fell in love with it. Now, if he hadn't met, so he's an ex-trader, so he knew what it took, that kind of, attention to detail, perseverance, the ability to take the knocks, to get back up, whatever it was. And also, I'm an absolute information junkie. Like,
Yeah, we can tell.
my team always laugh because there's hardly a day where there's not some sort of useless information being thrown out in the dealing room.
I think that makes you cool, by the way.
Oh, thank you.
Yeah.
And so I guess that personality, and no career test ever picked that up, strangely enough. Hey?
Whoa.
How bizarre, right?
It is
Anyway,
bizarre.
but some guy who was my boss at the time, he noticed. He went, "Oh, I know your type." So I came back, studied, fell in love with it, and the rest is history, I guess.
Wow. And then how do you come into studying Cartesian?
So we started Cartesian 8 years ago, and I had just left the African Development Bank. I worked at the African Development Bank in Tunis, and it really wasn't my thing. I'm definitely an investment banker, high energy, adrenaline, what's going on, where we're going. Like, I don't want to write a 73-page policy document. That's not what I want to do. I want to read research. I want to see where the market's going. I want to know that if I invest in a company, I've done my homework, and then I can watch what happens in the market, you know. And so I left the African Development Bank, and I was in France taking a year off. And my old boss from R&B phoned me and said, "What are you doing? Stop lounging around on the beach in France. Get back to South Africa, come do some work." And here I am today. So, yeah, and kind of the journey as it progressed is where we are.
Yeah, but like, take us through how do you come to reach the decision of you deciding that you're going to start Cartesian?
I think the more interesting question is how I got through the tough times, to be honest.
Okay, yeah, how?
Because I think I'm brave, by the way. I'm brave. So it takes a certain bravery and a bit of stupidity, right? To take the leap, to say, actually, I want to work for myself, and this is my dream. I want to build this kind of company. And one of the best places I've ever worked for is R&B. So I always think kind of this, their motto is work hard, play hard. And I kind of almost love it. And I think, I want to work for a business like that. I want to build a business like that, where people can come in, and if they work hard and they have fun, there are great opportunities for them, and you just build this great legacy. And that's kind of, let's get on with it, right? You write a business plan, you find some investors, you set up the idea, you find some clients, and off you go. Mm-hmm. The difficult part is, you know, that most businesses fail, right? And so there's what we call the valley of death. So you start off like this, and your revenue and your profitability is underwater, and at some stage you get up. And probably year 3 or 4, it was just difficult. It was just hard. It was just like we're not going anywhere. Nobody's giving us money to manage. Nobody knows us. You know, the idea with investments, you generally give your money to somebody you like, somebody you know, somebody who's been around for a while, somebody you can relate to. Mm-hmm. And on that subject, I probably have more female clients than male clients, because I think there aren't many female asset managers. And so when we speak to women, they'll give us their money to manage because they kind of relate to us. They're going to go, yeah, you're a woman, you understand. So that's just one of the little asides. And so in this 3-4 year period, I woke up one day and said, whoa, am I doing the right thing? And at that stage, I was heading towards 50, so 48 years old, and it's hard. Like, building a business is hard. Like, let no one tell you otherwise, you know? So 10 years to become an overnight success, that kind of story.
Yeah.
And I was like, okay, I'm 48 years old. If I'm going to carry on with this, it has to be a success, and there's no proof, there's no history that it's going to be. Or I must stop now, go back to London, get a nice cushy job at Morgan Stanley, fly business class, get nice bonuses, a nice salary every month, and life's going to be okay again. Mm-hmm. But I can't wait until I'm 50 or 55, because then, like, the youngsters are going to take the job that I want, and, you know, just like, that's just life. Yeah. And I think I know, what kept me going with Cartesian was that there are not enough female asset managers and not enough people of color in asset management. So I don't have children, but my brother and my sister do have children. And I wanted them to know that it's okay for a woman of color to be successful in finance or in asset management. And that really is what has kept me going. And so to the point where it's really a thing for me almost, like I don't explicitly talk about things like BE or feminism but it just sits in the back of my mind. And I think one of the problems in South Africa is that we don't have enough role models. And I often quote, and you've probably read me quote, you've read it somewhere, you've heard me say it before, is that Sheryl Sandberg, in her book, she wrote, she quoted Gloria Steinem, who's kind of the original feminist, in the 1970s. And she said, the noun goes to the strong and the weak get the adjective.
Oh yeah, I've heard you say that.
Right? So even though I am all about promoting females and people of color in my industry, I don't want to talk about it. I don't want to give them an adjective. Like, don't call me a black female asset manager. I'm not. Don't give me an adjective. I'm an asset manager. Right? My worst is when people ask me about my BE credentials in Cartesian. How many black, how many female, how many colored, how many white? Like, who cares? I employ people because they're good, right? I get it. Like, I employ people because they're smart, they're good. And so don't undermine my black female staff by giving her an adjective. Call her a fantastic investment analyst. Now, I always get taken out for this because we all know, well, we spoke about it earlier, on the history of South Africa and how do we correct the ills of the past. Okay. I don't have the answer. But what I do know is that this is not the way to do it. We cannot continue to divide and think that we can conquer that way. You've got to start somewhere. You've got to start with empowering people, sure, but not because of their gender or their skin color, but because they're human beings and they deserve to be where they are. And if they work hard, then they deserve to get what is coming to them, or owed to them.
Okay, so do you still hang around at Hyde Park, chilling at Yum and whatnot?
Well, it's my local, because I live around the corner. And so, yes, I still hang around there all the time. In fact, I'm terrible, because it's a bit like fancy, Yeah. Hyde Park's a bit fancy. But I'm the one who goes to buy her bread and her milk and her jeans at Pick n Pay. Or even worse, on a Saturday morning in my tracksuit. Like, I'm not I don't get dressed up to go to the shopping center. So yeah, it's like my corner cafe.
No, I enjoyed reading about that in the book, how you wrote the book, chilling at the restaurant, telling us about the owners of the restaurant. That was a cool story, by the way. So tell me this, I'm an income junkie, right? You talked about us in the book. What other ideas would you give a person like me who's an income junkie to use to generate more income? Because, for example, I literally bought retail bonds so that I can get monthly income to just go sit at a restaurant, have a nice drink, and then think about what I've done in that month and what I'm going to do the next month and stuff like that, right? So I did it by buying the bonds, the monthly payout bonds, and then they give me that income for me to just sit down. So what other ideas can you share with us, the income junkies, to use to get more income?
I'm going to surprise you here. I suspect you can tell me what to do. I'm not an income junkie, not at all. I'm an asset manager. You give me your income and I'll grow it for you. Right? So, and it's all about personal investment style and requirements and your risk appetite, right? So the first thing you said to me the first thing that came to mind when you said to me that you bought retail bonds because they pay you monthly, you take that money, you spend it. Have you not read my chapter on compound interest?
Wait. Okay, let me clarify things. Okay, anyway, explain, yeah?
The whole point is to take money that you earn and invest it. And once you invest it, and if that money grows, that's like free money because you haven't really worked for it. There was no blood, sweat, and tears. There was no going to the office, whatever. They paid you. That asset manager, that bank, that retail bond, the government actually owns the retail bond, right? They paid you to lend them money. So that's free money in inverted commas. Now take that free money and go and make that work. So now go and invest it again. So you earn money, more free money on top of free money. Now we're talking, right? Now that's the thing. That's how you really want to do it. I'm also not really a financial planner, which is odd because my book is all about financial planning a little bit and budgeting, so I don't do that. But what I do understand is risk and diversification. And I think if anybody's thinking about investments, they need to think about that. So personal risk is the ability to withdraw your money when you need it, right? Because you know what happens, right? The markets go like this, up and down. Some days you're good, some days it's bad. And invariably what happens is when the market is down, when your shares have lost value, is when you need the money for some bizarre reason. Because the economy is bad, so the shares have gone under. The economy is bad, so you've lost your job or somebody in your family's lost your job, and now you need that money that you've invested. Be careful of that. So what you want to do is to diversify yourself out of that. So you need some money that you can withdraw and spend, because we all need that cafe coffee and the croissant right, we all need it. Make no mistake, I'm not saying don't do that. You need the money that is yours, that you can spend and enjoy, you know. And then you need the money that is medium term, because you need a deposit on a house, you need school fees, you need university fees, whatever the case may be. Then at some stage you need to retire. And so every bucket or every stage of your personal risk is in a bucket and needs to be invested differently. Okay. So generally, the stock market returns, generally, historically, returns higher than money in the bank. Okay? But money in the bank you can access like this, and you know it's going to grow little by little. But the value of the money doesn't drop like in the stock market. Right? If you'd been invested in the JSE in March, at the beginning of March 2020 or 19, when was COVID? 20, right? March 2020. By the end of March, the value of your portfolio in the stock market, the equities, shares, would have been 30% less. If you needed to withdraw the money there, like that would have been depressing, right? You'd invested 100 Rand and suddenly it was worth 70. Although if you'd had money in the bank, it would have been worth, I don't know, 101 Rand, call it, for the month. You could have withdrawn it, no problem. If you leave that same amount of money in the bank, maybe you would have got 106 Rand at the end of it. If you'd left your money in shares, in 3 years' time, you would have doubled your money. So it's about risk. It's about the volatility, understanding how the markets move, how different asset classes move, how different funds, how different portfolios move. So we have a number of portfolios: low risk, low return, high risk, high return. That's generally the spectrum.
Okay, I'm with you.
And as long as you understand, some of my money I'm going to need tomorrow, and some of it I'm going to need long term, but I want a higher return. If I'm going to invest for longer term, I want a higher return, right? That's kind of fair. So it's not about putting your money in one basket. It's about diversification. Now, generating income, and that's all I've got for you. You tell me how to generate more income. I've only got 24 hours in a day. And the only way I know is to work hard, invest my money, and keep investing.
Well, that's actually a good question, because I'm lazy. I like things to be done effectively. I like big results using small enough input, right? So mainly I'm a real estate guy. My portfolio, majority of it is in real estate. And then I like compound interest a lot. I love compound interest because remember I said I'm lazy. So compound interest, as long as you just put enough money in there, you get it compounded and you reverse it back. Like I literally bought, what was it? I think it was a washing machine using compound interest only. Like I just reversed that money in, reversed it in, and there you go. I got 15,000. It's like I'm gonna buy myself a washing machine so that I can be more lazy, and then put my clothing in there. It washes the clothing in there while I sit, read her book for the entire day. So it's something that I like doing. I'm also like a productivity junkie, so I'd like doing such things like that, using compound interest, using REITs and stuff like that to get more return while I put in little effort. But not lazy as in like just sleep around, you know. But anyway, this is not about me, it's about you, yeah?
Can we make a point on the compound interest? You know the way it works for you, it also works against you, eh?
Yes, let's talk about that.
Yeah. So the idea of investing getting money, a return on the money you've invested, and taking that return, investing it again, which your free money, you're now getting more free money on top of the free money, right? So it grows. It works in reverse when you borrow money.
Oh, yes.
Right? So when you're paying somebody interest, like that's just the wrong way around. So it works so well on the upside. It works as badly as it works well on the downside. So the first thing I tell anybody, if they're asking for any kind of financial advice, you get rid of your debt. Do not, I must be careful what I say here because some people might watch it, but those store cards kill me. Like buying something that you're going to use today, that you're going to pay off in 6 months' time and pay interest on it. I don't understand that. And well, that's not true. I do actually understand. And I understand that emerging market consumers are ambitious and we want stuff. The world is open to us, and you also want to keep up with the Joneses. You also want to look nice. You also want to drive the fancy car and live in the nice house and. But I would say be careful of getting caught in that trap. It just is a trap. Like, who cares? Like, I spend money on things that make me happy. By consumables or travel, right? Like, it's not investments at all. I don't spend money on cars. I have no affinity to cars. Like, I don't like cars. I like a nice watch, maybe. I don't have 7 of them. I have one nice one. I spend money on things that I enjoy, which is generally experiences. My wardrobe's fairly bog standard. I don't buy designer clothes, not because I can't afford them, but because I don't really care. As long as I'm presentable, I'm okay. So I think you've got to do what works for you. And yes, if you like designer clothes, that's fine. Buy the designer clothes, but don't buy them on credit, first of all. Be careful of that.
I like what you said. So it's becoming a popular topic on our show. We've noticed, and last time we sat down with David Beatty, he also talked about this. We've noticed that, especially in real estate, because David Beatty is in real estate, he met someone who he was managing properties for, and when the person walked in, they looked like an average Joe. In fact, they almost looked poor, right? And he was like, when I actually got to know that person was sitting on billions and billions of dollars. That person has properties in America, So I wanted to know, since you're in asset management, first, has that happened to you? And then just describe the character.
Has that happened to me?
Yeah, have you met someone who looked totally the opposite?
I meet a few of them. I know a few of them, yeah. But I don't judge, because I'm probably that person.
Yeah, so you've met a few of them, so be right.
Yeah, and so look at me, I'm in jeans and an ordinary T-shirt, and I have property in Europe. So, I dare you to judge.
Okay.
It's not about, for me, it's not about looks. I don't think, in fact, if I see somebody who's wearing designer clothing, I kind of question. I'm like, really, can you afford that? Or do you have a line of credit somewhere that you're paying off? So that's my first question. It's not the other way around. Oh, you look poor, shame. Can you really afford to be invested with me now? I'm the other way around. Yeah, I know people who invest. People who invest are not wearing designer outfits and looking like they are the Kardashians, for want of a better example.
So what about on cars? Do they drive flashy cars?
Generally, yeah.
Okay, so they like cars.
Yeah. We had a conversation in the office about this. A car, in my view, a car is not a fancy car is not a balance sheet decision. It's an ego decision, right? Mm. Don't be judgmental like that. Or it's a heart decision. Now, if you love cars and you love the sound it makes and the way it makes you feel and you just feel great, then sure, you deserve a good car. I don't have that. In fact, I want an electric car that doesn't make a noise. I don't want to hear this engine roaring. And but if it makes you feel good, then that's fine. That's your thing. It's okay. Spend your money on the car, but don't spend your money on a car because the Jones is next door watching you.
I like what you're saying. And then in terms of your real estate portfolio, is it divided into physical real estate, or are you into REITs? How does your real estate portfolio look like currently?
Both. So definitely both. So listed property and physical property. And the listed property is an interesting one because, during COVID, all those listed property shares took an absolute dive. And the question, of course, is, do I sell at the bottom or do I wait for them to bounce back? And for us, it's about investing in quality shares, right? So we don't invest in speculative instruments. So we don't invest in what we think doesn't have solid fundamentals or it's a good quality company. Because sure, there are companies and shares that will triple, quadruple in value over the next 5 to 10 years. But if we don't understand it and we don't see where that revenue or that profit's going to come from, then we don't buy it. We play in crypto for ourselves because it's fun and we're in the world of finance. We need to know what's going on out there. But we don't invest our clients' money in crypto, for example, because we know what it is. And when I say we don't understand it, it's not that we don't understand it. It's that it doesn't make sense as an investment case. It makes sense as let's have some fun and put some money into it and maybe it'll quadruple or treble or whatever, right? But there's no fundamental value that we understand in cryptocurrency. We understand blockchain well, and so we are invested in blockchain companies that are building blockchain or that are using blockchain. Okay. Because there is a process, there's a way to generate revenue from your assets being the blockchain that you're building. There's no, other than, I think they call it stablecoin. Is it stablecoin, which is actually backed by an asset? And Facebook wanted to do one as well where they launched, and I forget what they wanted to call it, where they launched a cryptocurrency, but there is an underlying value, a collateral, a cash, an asset that kind of determines the value of this currency.
I see what you mean.
Yeah.
Now, while you talk about that, it reminds me of the story of gold, the story of the money changes, monetary theory, fungibility, and whatnot, right? So, are you invested in gold?
We do. And it's that you've nailed it, by the way. Well done, because that's an interesting one, right? Okay. I hate gold, but do I understand how the market works? Yes. Mm-hmm. So what is it about gold? Because we lost the gold standard in when? 1972, I think, right? I can't even remember. The gold standard is so old. Like, we used to use gold as a currency or an asset to back the value of currency. We don't do that anymore. Like central banks, they do, by the way, still sit with gold bars in the vaults, but they don't use it to buy and sell oil overseas or whatever the case may be, or for the value of their currency. So why is gold still such a asset class or a hedge against economic bad times? I don't understand. Quite frankly, if the world's falling apart, we go into recession or depression, trust me, I can't take my gold bar out and try and sell it to anybody or melt it down and drink it for breakfast. Like, to me, there's no real value in it. But I understand how markets work, and I think I understand sometimes how investors work. And so psychologically, when the market falls, people buy gold as a hedge because it's solid. They think it'll continue to hold its value, blah, blah, blah. So yes, I don't love it, but we're invested in it. So we have a portion of our portfolios
in gold. So the gold that you have, is it also like on the markets where you literally use your platform to buy gold, or is it physical gold?
No, we don't buy physical assets. In our company, we don't buy physical assets. We have listed assets. So you can easily get an ETF, an exchange traded fund, that has exposure to the gold price, for example.
Okay. So now, what if one of your analysts comes with you with an idea? They're like, okay, this is an idea.
It's his job to come to me with an idea.
True. But now, what if they come with an idea that involves physical assets? The reason I'm saying this is that in Tony Robbins' Money Master the Game, he talked about a hedge fund manager who literally bought pennies. And then he stacked them up in a house, like physical house. He put in pennies in there. He even got his kids doing that, right? Because he knew that the government was slowly debasing the coins and they were losing value. And he knew that the ones that he has, if he stores them and then after a while he sells them back, he will get a guaranteed return. So the point is that you can get a guaranteed return using this system, right? Even though it takes patience, you have to collect all these coins, blah blah blah, you know. But what I'm saying is that would you go into physical Kruger?
Yes, absolutely. So if you as an investment analyst can make a case for a good return or a good investment case on something, definitely. So each of our portfolios, the different portfolios we manage, have different mandates. When you invest in one of my portfolios, you're saying to me, this little pot of money that I have here, this 1 million of my 10 million is for me to have access to immediately and to be able to withdraw tomorrow, next week, in a month, in a year, without it losing value. This little 5 million is for, I want a higher return than the money market stuff. So maybe I want 14% compounded per annum. But I understand if I do that, then the risk of this, the value of that portfolio is up and down, right? So I'm going to leave it with you for a longer term, but I want a higher return, right? If you then say to me, as you mentioned about the penny, collecting pennies, it took a long time. And there was no guarantee, because government could have changed their policy and said, well, actually, we're now devaluing those coins. But if you as an analyst came to me and said, this is my investment idea, I was like, which of our portfolios does it fit into, if it fits into our portfolios? If it fits, then we're in, right? No problem. If it doesn't fit, well, then we must come up with a new portfolio, find new investors, put in our own money and decide what to do with it. So no investment idea is off the table. But to convince me, you need to convince me. Like,
That's how it all goes.
Explain this to me.
Yeah.
How do you think we're going to make money from it? What is the process? What is the catalyst from it going from 1 rand to 10 rand share or penny or whatever the case may be?
Hectic. Okay. Then aren't you scared that you might hire a portfolio manager, an analyst who uses personality to push through their ideas?
Of course I am. Absolutely. Sure. But I think, so first of all, if you're going to join Cartesian, you have to go for a personality test.
Oh, okay.
We absolutely do cool. Myers-Briggs.
Oh, wow.
And criminal checks and the whole lot.
I see you followed well in Ray Dalio's shoes.
Oh, right.
At Bridgewaters, they also do personality checks and whatnot and stuff
absolutely.
like that.
You and then we've got rules in place. So you can't just buy anything. And we've got compliance training. And so you can't just buy pennies and think that you can add it onto your money market portfolio. No, that's kind of what it is. It would be difficult for somebody to come and work for me and be a Madoff, because we won't put up with it. Compliance is everything in our business. I mean, it's boring. It is everything. It is the minimum requirement for working here. You have to be compliant. So no, we're very careful about that.
Okay,
And can I just say, most fund managers are like 99.9, and the 1 or 2 stories you hear of, like, they are stories because they are so rare. So, and you can always check, by the way. You can check. There's a website where you can go and see if an asset manager is registered, compliant, has its license, all those sort of things. So do that.
So most asset managers, how would you describe their personalities from your experience so far?
They're analytical. They've got inquiring minds. They absolutely want to know, and they want to know everything. Not everybody is big and brave and bold. Like, some people are a little bit reserved and quiet, but they have to be brave. Like, you have to know that. You have to trust yourself. You have to have done the homework. You have to know that if you buy a share, that you've done the homework and that it could go wrong, right? Your ego takes a knock, eh? And one of the things I often say about the stock market is it's a good leveler. Like, it'll humble you very quickly. Like, it teaches you humility. You are not perfect. You're not always going to get it right. And so that ability, that resilience, that ability to bounce back, that ability to go, okay, I may have got it wrong this time, but I'm going to work harder next time to get it right. And then maybe you get it wrong again. And you have to keep bouncing back. So they're smart, kind of hardworking, inquiring minds, and resilient. That's how I would describe the asset managers that I know. And I know a lot of them, and they generally are like that.
Okay, so now you were featured on the 100 Women in Finance, and you had an article there. They asked you a question about leadership. what I want to know right now is, how do you improve your leadership skills and qualities?
I'm not sure I'm the best leader in the world. I lose my mind sometimes. Oh, I have moments.
Oh, okay.
But I know what it is, right? I demand a lot from myself. I have high standards for myself, and so I expect somebody else to produce high standards. Like kind of, and it definitely shows. Like every once in a while, my team kind of, I can see them kind of sit up and go, like they get a fright, and they're like, why is it like that? Why hasn't it been done properly? We're like, why are you not doing your ultimate best? So that kind of, I'm working on it. You can ask them; they're just around the corner. But I think I lead by example. Like you know, I probably work harder than them, even though it is my business. So yeah, I think lead by example. And I know the article you're referring to because it asked about a quote.
Yes.
Yeah, and I think the reason for that is the quote I gave was the third president of Kenya, right? And he said, leadership is not a privilege, it's a responsibility. Once you're a leader, you have a responsibility to the people you are leading. And I do feel like that. I definitely have that kind of sense of deep responsibility, not just for my clients, but to my staff as well. Not just to make sure that kind of they deliver, but to make sure that they're the best they can be.
What's the worst thing that ever happened while you were a leader?
What's the worst thing that ever happened?
While you were a leader?
Yeah, like lots of worse things happen. Right? People leave, you upset people. Like upsetting people is not great, and kind of making sure that when people don't reach their full potential, it kind of breaks my heart a little bit. And maybe that's because I haven't led them properly, or maybe they have less potential than I thought they had. So the disappointment, I think, hurts me. The disappointment of that sort of thing, that hurts.
Okay, and then what's the pleasure in being a leader?
Oh, it's right. So it's the same as owning a business, right? The lows are deep and hurtful and hard, and the highs are exceptionally high. I mean, just think about how it feels to take somebody from here to here, like to give them the opportunity. Like there is no better high. But it's fleeting, eh? Because tomorrow we're back to work. So the lows are deep and hard, and the highs are extremely high but fleeting.
Hey, hectic. Do you have any leadership book you can recommend or that you learned from?
No, but you know, I think you need to read The Stress Code. I think you need to read some of Richard Sutton's books. So he did The Stress Code, and then there was another one, and he's just released a book called Thrive, which is about understanding your level of stress and anxiety, building your resilience. And he was a coach for some high performance sports people. And I think that, because my team is very high performance, but you know, in this industry, they're kind of extremely smart, extremely hardworking, have high ambitions. And so that kind of understanding how to deal with them, as Richard Sutton does, is important. So I definitely buy any one of Richard Sutton's books, actually.
Okay. And then who do you look up to as a leader, you personally?
So cheesy, but my parents are great leaders. But they are, and because we spoke about it earlier on, right? They lead by example. They never really told me what to do when I was growing up. They just led by example, very quietly got on with it. And I mean, there were definitely times we disagreed, right? But at the end of the day, you kind of see what needs to be done to get there.
Wow, hectic. And then talk about leaders in investment and in this industry. Who do you recommend we should interview after you?
Sure, your list is endless. in my industry.
Yeah, investing, asset management, whatever.
You need to speak to a couple of people in private equity and to understand what they're doing, because there's a lot of interesting things going on at the moment. There's a woman that started a fund called Norskin, Natalie Colby.
Okay.
And she's investing in tech companies in Africa. And I think there are just so many interesting things that she's doing. So private equity, so not listed, so not bonds or shares or that sort of thing. Definitely get hold of her if you can. because these people are busy.
You said what's her name?
Natalie Colby. I'll send you the...
Natalie Colby.
Yeah.
Okay.
Paulo Letica, she's head of ABSIP. She's the chair of ABSIP, and she has a private equity business as well. You definitely want to hear about her journey and how she started in investments and kind of what she did. And she sits on the board. She's one of my trustees on the board of the Early Care Foundation. So I know she's smart. Again, they're incredibly busy, but yeah, I'd go with one of those two, or both if you can.
Okay. I like that. Private equity, that's something we need to get. Also, let's do this. Our show, we like to give people one piece of advice, one practical piece of advice that they can take or something that they can do that adds value to them. Most of the times it centers around asset management, investing, and real estate and stuff like that, right? So if you have anything, a tip or one thing that people can do, but it has to be very practical, please look into that camera and share it with the people.
So I would say the best thing you can do for yourself is start investing yesterday. And if you didn't start investing yesterday, then start investing today, because the sooner you start, the better. One of the problems with investing is that people always think they don't have enough money to invest, but you can. You can start, and start small. You don't have to start big. Just take a little bit every month and start investing. Watch your investments and do yourself a favor and learn. And it'll become a habit.
Everyone, we had fun with Anthea. She's very smart, very knowledgeable. This is the end of our interview. Hopefully it's not the last one. It's just the end. We'll continue some other time, some other day. For now, my favorite part, we get to sign the book. I really love this book. Thank you a lot. Anthea, it was lovely.
Really was fun.
Please keep teaching more to other people and stuff like that. Thank you. Everybody, this was dope. Bye.